Well, all things considered, today was a pretty boring day by Wall Street standards. We only closed higher by 0.25%. But that doesn't tell the whole story. The bears did control the action in the morning. Bulls did take control of the ball and actually close near session highs by the time it was all said and done. However, we are starting to see some earnings coming in after hours. Snapchat just came out a moment ago. Their stock is down 13%. Apple should be coming out with their earnings here soon while I'm in recording, and so maybe we'll take a peek at that a little bit later on as well. Today's trade application example is going to focus on a stock that hasn't really gone anywhere for the last couple of months. We're going to focus on maybe an iron condor on a stock like that to see if we can generate a little bit of premium while it's deciding what direction it wants to go. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's May 1st, 2018. If you're new, welcome aboard. Great to have you here. You can see that you can click on the red subscribe button next to the YouTube logo. We also have a Market Scholars logo that sometimes floats on the YouTube screen, so you can also subscribe to our channel through that as well. We'd love to hear from you in the form of either the thumbs up or the comments if you like these videos. Obviously, that's your chance to vote on whether you want us to continue these or not going forward. In addition to that, we do have a description area that would allow you to sign up for our email distribution list, which not only lets you know when these videos are ready for you to view each day, but also gives you a heads up on which stocks are giving you bullish and bearish clusters within the S&P 500. In addition to YouTube, we're also heavy users of Twitter. Make sure you're following me there at Brandon Van Zee, all one word. In fact, I'll be at the Berkshire Hathaway shareholders meeting this upcoming weekend for my 14th straight year. Very much looking forward to that. And I likely will be doing a lot of tweeting from there. So for those of you that have never been to that event that has been dubbed Woodstock for Capitalists, make sure you're following my Twitter feed this weekend. I'll do my best to keep you in the loop on anything interesting that I stumble across there in Omaha. Of course, you can follow the Market Scholars handle as well. Our handle is at market_scholars on Twitter. We're also on Facebook, so if you are on Facebook, we'd invite you to join our group there. We do have over 1,000 members to that group these days, and some excellent commentary in that group, in addition to what we're doing in these videos here as well. So with that, let's go ahead and do some analysis on the markets. As you can see, I've got the S&P 500 pulled up in front of us here. We were up 0.25% to end the day. But here's what I was kind of referring to before. You'll notice that this candle looks an awful lot like a hammer. If you consider that it's at a support level, then it would indeed be a hammer. And you usually are looking for a hammer to have kind of some of these qualities. Generally speaking, you want to close at the high of the day. Now, how you're going to know if they're closing at the high of the day or not is if there's no wick on top of that candle. A wick would be like this candle over here has this line sticking out of the top. Notice on this candle, which represents today's activity, there is no wick on the top, which is telling us we actually closed at session highs on the S&P 500. That's considered a bullish sign right there. In addition to that, a hammer typically has a longer tail on the bottom than the length of the body of the candle itself. So generally speaking, it's kind of telling us that the bears did try to push the market lower earlier in the session, but by the end of the day, the bulls did take over. Maybe we can kind of highlight that here on the trade tab, where I typically will have kind of a one-day, one-minute chart pulled up in my trade grid here. Now remember, my trade grid along with everything on my charts is now available to Market Scholars Premium members. I did create that tutorial video here over the last couple of days, and you can find that in our blog area. But anyway, on this little widget here in the middle, this gadget, you can see the daily activity of whatever security you're looking at. I have the S&P 500 pulled up here, so you can see we started the day right here at about 2645, but the first few hours of the day we were drifting lower and lower and lower. At one point we touched as low as 2625, but by the end of the day we really rallied as high as we could go and closed at session highs by the time it was all said and done. So again, that gives you a positive psychological advantage if you're a bull, saying that, yeah, the bulls could have easily just laid down and let the bears walk all over them, but they didn't. They kind of had some resiliency in them and took the ball themselves and rushed it higher. Now, you'll also notice that that activity was enough to make the posture of the market forecast indicator itself to turn back to bullish. So you'll notice that the background color of this chart to the right of the candle today is now turning that light green color. Now you'll notice down below, if you just want to eyeball it on the chart itself, that green intermediate line down there is what we're using to establish our posture in a video like this. And you can see that has now curled higher after what happened there yesterday. You can also read that over here as one more place for you to kind of understand how to determine posture using the market forecast tool. So the intermediate term line, again, that green line that you see down below, says right here in the label that it's at 47.96 and rising. So if it's between the 20 marker and the 80 marker and it's rising like it is right now, we consider that bullish. However, it isn't until we get above 50 that we consider it strongly bullish. So yes, it's good that we got back to that bullish posture today, but we would consider it weakly bullish at this point. For the most part, as I've been mentioning week in and week out on these videos, despite having bouts of bullish posture and bearish posture, I wouldn't read too much into that simply because we're not in a trending environment. Remember that green line, how we set our posture, is really something that trend traders are going to use. This last 3 months, as you can see on this chart, really has not been a haven for trend traders at all. This has been more of a swing traders environment, chop and slop sideways, where you're basically buying the dips and selling the rips. So at this point, we're kind of in the middle of the range, no man's land here, trying to figure it out. Are we going to go higher? Are we going to go lower? At some point, we'll break out of this range, but right now, we're just kind of, like I mentioned, in no man's land there. All right, let's go ahead and actually, you know what? Now that I'm thinking of it, let's take a peek at Apple to see if it's out. Let's see if Apple's out with earnings. So I'm going to come back over here to the trade tab because I think they were supposed to come out a half hour after the market closed, and we are now at that point. And indeed, it does look like they are out. Not a big move here so far. In fact, we're basically flat. If you didn't see some of these numbers coming in right here in real time on the news panel of our widget, you wouldn't even know. They did boost the dividend. That catches my eye. So let me take a peek at that here real quick. Actually, that's popping up in my other monitor there. So let's just, out of curiosity, take a peek at what sort of dividend increase they're making here. I'm not sure if they're actually, oh yeah, there it is, 16%. That's a very, very healthy dividend increase. So that's a good sign. That's a good sign right there. A lot of times when investors invest in a company the size of Apple, they're generally thinking that it's reached a certain stage of maturity where they're not going to be able to reinvest 100% of their profits back into their business and expect excellent returns going forward. So a lot of times these types of companies will then share their profits with shareholders. Apple's done an excellent job here in the last 5 or 6 years of raising that dividend at excellent rates. They don't have the long history of raising dividends the way that a lot of the dividend aristocrats that I talk about do, but at least now that they are part of the dividend paying community, they're doing right by their shareholders by raising them at rapid rates. So good to see Apple up raising its dividend 16%. And then we'll see, of course, in the after-hour session as things shake out what Apple's share price will actually do. I mentioned before that Snapchat was down significantly, so be aware of that. That might have a negative impact on securities tomorrow, but hopefully Apple can tilt that in the opposite direction. Let's take a look at some other charts here, and let's go to chart 4B. This is going to be our 4 grid here, and this is just to take a quick peek at what's going on with the other 3 indices in addition to the S&P 500, just to see if there's anything different about it. A lot of times all 4 of these indices will be the same, so we don't spend a lot of time with it. But what I would say is that all 4 of our postures are now bullish. Again, what I'm looking at to quickly see that in my own eye is what color is the background color of the chart. But you're certainly welcome to just quickly look at that intermediate label right there and ask yourself if you see that it's rising there between 20 and 80 like all of them are at this current time. So we do have bullish postures across the board. Now, you can distinguish things just slightly based off of price and where the moving averages are. Notice that the Russell 2000 also had a hammer here today, candlestick formation, but we closed above the moving average on the Russell 2000, and the same thing happened with the NASDAQ Composite. There, as I look at it, it's not a hammer, so be aware that although we closed at the high of the day, we didn't have a long enough wick at the bottom there to actually qualify that as a hammer. But nonetheless, the NASDAQ and the Russell 2000 are both trading above their moving averages right now. Before we get too excited about that, we have to remember that the moving averages themselves are falling, so it'll take a little bit of time. Remember, moving averages, like so many technical indicators, are lagging indicators. They need data from prices that continue to develop as time goes on to then readjust their own technical indicators. So as always, those moving averages will take a few days, even if the market continues to rally, in order for them to eventually catch up to what's happening with the market. Let's take a look at our 3 green arrows setup here. And so that's going to be chart 4C. And here you can see it's kind of a little bit of a mixed bag. We don't have 3 green arrows on the S&P 500. We do have 2, so we've got a green arrow on the moving average, and that's a 30-day moving average in this case. And we also have a phantom green arrow down here on the stochastics, but we still have this red arrow in play here on the MACD. But if you look down below, we do have on the NASDAQ composite, we do have 3 green arrows there after today. In fact, all 3 of them lined up today. That doesn't always happen, but just by coincidence, it did here today. All 3 of those indicators went from red to green in today's session. Again, with Apple coming out after hours, maybe some positive vibrations there with the dividend policy. We'll have to see what their conference call and so on suggests as well. But right now, maybe that's a good sign because, of course, Apple's the world's largest publicly traded company. Last I checked, I think its market cap was like $800 billion. And so they're going to have an outsized effect on an index like the NASDAQ that is a tech-heavy index. Apple's also going to have an outsized effect on the S&P 500. So anyway, the Dow Jones is probably the one right here that is lacking the most. Notice the Dow Jones is still clearly below that moving average, whereas most of the others are at least touching the moving average. As we move forward here, let's take a look at our next chart. This is going to be our 1040 crossover. And so, you know, we don't spend a lot of time on this analysis because this is a longer term approach here. These are 3-year charts that you're looking at here. Again, the same 4 US indices. And the background color is going to tell you whether we have bullish or bearish crossovers that are taking place. Now, David experimented with this a little bit in last night's video, did a great job with it. One thing that he did ask for an enhancement on is to put these little arrows on the chart as well whenever price crosses either above or below the 10-period moving average. So remember, the background color being green in this case means that the moving averages themselves have crossed. So the orange line, which represents the 10 period, has crossed up and over the blue line, which is the 40 period, right back here where my mouse is currently. So that's a longer term approach. But of course, in any sort of a trending market environment, you're going to have times where price is moving over and under and over the various moving averages that are out there. So you'll now see some of these little arrows on the chart as well, just to signify when that occurred. Now, if you ever want to kind of zoom in on any one of these grid charts that I have on my setup, for those of you that have gone through my tutorial video, all you're going to want to do is, first of all, right click and go to maximize cell. So that way you can see it real big like that. And then you can zoom in even further if you so desire. Remember, they have some zoom in features on Thinkorswim charts right down in the lower right. You can also kind of zoom in by kind of highlighting a certain area of the chart. So anyway, you can see those arrows a little bit more clearly. Like over here, price went below that 10-period moving average, and then the very next day, or in this case a week, since this is a weekly chart candle, we did see the price move back up above it. So that's what those various arrows are showing you there. So when we see a lot of these arrows kind of congregated together like we do here recently, it just goes to show you again what I mentioned here a moment ago, which is we are in a chop and slop type of a market. We can't figure out strong trend one way or another. So as it stands right now, we still have bullish longer term postures in all 4 of our US indices here, but some of those are starting to come into question. As you can see, the MACD2 lines are getting closer to the 0. Remember, if this black line down below here goes down to this pink line, that means that these 2 moving averages are basically crossing at that moment in time. So when we have a high peak like we did back here, that means that this orange line is way far above that blue line right there. As we're starting to drift lower here, you can see that that orange and that blue line is starting to pinch right there on the Dow Jones. So It's been a couple of years since we've had a bearish posture using this 1040 crossover method. We might very well be due, but at this point we're still not quite there. So now with that, let's go ahead and do maybe a little bit of 12 grid analysis. So for this, remember, I do have to kill that camera feed, but this first 12 grid analysis is going to be our intermarket analysis 12 grid, and it gives us a sense of what's kind of happening out there beyond the stock market. As you can see, there's a variety of pink and green background colors there that distinguish whether we have bullish postures or bearish postures using that market forecast intermediate term line. Now, one of the things that did catch my eye right here was yields. Notice that yields is the chart in the at the top, second from the top. Second from the left on the top, I should say, and that's what a lot of people have been talking about lately. Obviously, the 10-year hit a 3% yield here within the last couple of weeks. We did get a little bit of a Cahold take place in yields themselves. So a Cahold, for those of you that aren't familiar with that parlance, is just simply close above the high of the low day, with yesterday being the low day. Now, of course, as you can imagine, the opposite effect happened on the long-term bond prices themselves. Remember, yields and bond prices move inversely to one another. So here we had this nice reversion rally for about 4 days on TLT, but now we pulled back fairly significantly today in it as well. We were down 0.58% in the U.S. government long bond here today, and that was forming basically a close below the low of the high day in this case. So some interesting price action there from the interest rate environment. You will notice some other things taking place that are catching my eye. In the lower left-hand corner, we have the U.S. dollar. Notice that U.S. dollar is really taken off. I mentioned that the last time I did the video as well, but it's just continued. That thing just seems like it's going up at a pace that just can't be sustained. But then again, it doesn't really want to slow down yet either. So we'll watch it play out. But remember, one of the things that happens when the dollar gets strong is that typically gold struggles in that type of environment. And if you look at that chart right next to it, gold has really been struggling here in the last, let's call it, 2 weeks or so as that dollar has been rallying. Somewhat interestingly, some of the other commodities are hanging in there a little bit better. You know, some of the ag commodities, as you can see down below, starting to break out in a nice way here. And then crude oil, although hasn't been, you know, going up at the same rates it was earlier a couple months ago, has at least just been going sideways. So they've been able to kind of offset the rising U.S. dollar quite a bit better than gold has. Let's go ahead and take a look at our next 12 grid, which will be our foreign markets 12 grid here. And as you can see, again, we've got kind of a mix of green and pink charts telling us that some are bullish, some are bearish in terms of the intermediate term line. When we look at various trends that are being established here, there's not a whole lot to get excited about trend-wise. The United Kingdom has been one of the stronger kind of countries out there, but even that is nothing to write home to mom about. This has really just been going sideways more than anything here in the last couple of weeks. Now, one of the interesting things to me is if I were just to look strictly at the price action all by itself, I would say that the two worst looking charts on the board are South Africa, which is in the lower right-hand corner, and then Brazil, which is in the upper left-hand corner. But you will notice that the color background of those charts are different. So Brazil, somewhat surprisingly, despite having really ugly price action here, actually does have a bullish posture using the market forecast intermediate term line. You can see that that's at 23.99 and rising. Now I'm guessing that it's a very faint rise, but remember again, if you ever wanted to double check that, there's a couple ways to go about it. You can right click on the chart, you can double click in this little kind of blank area right here, or you could also click this drop down right here and just go to maximize sell. So there's a number of different ways where you can make that bigger so you guys can see it on your own when you're following along on your charting system, at least those of you that are Premium Market Scholar subscribers. So as you can see right here, this is what I was mentioning before. Yes, technically the green line is rising, but you can barely make it out with the naked eye. This looks flat to the naked eye, but technically it is up basically 0.01 or 1 basis point. How do I know that? Well, notice that over here on the indicator itself, there's these different colored lines. And of course, the one that we focus our attention on is usually that green intermediate line. So these green numbers on the indicator itself that I'm kind of pointing at right here also signify what the reading is on whatever day or week that you're pointing at. So as I come back over here and I point at yesterday's candle, notice if you glance your eyes back to that reading, it says 23.98. Now glance just directly below that reading where we have the intermediate term label and it says 23.99. So we literally went up by 0.01. Now technically, yes, that did go up, but some of you might apply a certain filter to that and say, yeah, that's not significant enough for me to actually change my posture on Brazil. So right now, be aware that technically we have a slightly bullish posture on it, but that could easily go away by tomorrow. Let's go ahead and take a look at our next 12 grid, which will be our U.S. sectors. And so here you can see that we have one kind of corner, the lower left-hand corner over here is where we're still got some holdouts of bearish postures. But otherwise, the rest of the market sectors are actually holding up pretty well. And again, remember the S&P 500 does have that bullish posture now. I mentioned that before, but just to confirm, that's the chart in the upper left there. So as of today, we're back to a bullish posture. And most of the other U.S.-based sectors are in alignment with that. The only three holdouts are XLI, and some of you may have been looking at some of the defense contractors lately. Wow, they've been getting blasted. I don't know if it's this news out of North Korea and South Korea or what, but yeah, if you look at some of those charts, Northrop Grumman and Lockheed Martin and Raytheon and so on and so forth, they've really been getting punched in the teeth. But some of these others, you'll notice down below, we've got the staples, which have been a house of pain so far this year. We actually talked about one of the key consumer staples companies this morning in my options for long-term investors trading room, where we focus on selling puts and selling covered calls. And we actually selected that particular security. So for those of you that are premium subscribers, make sure you go back and watch the recording if you haven't listened to it already. But anyway, staples have been in a house of pain, so much so that we're starting to get some of those bullish clusters that are developing on it. Now, the telecom's a little bit of a different story. You guys will likely recognize the fact that we had a big merger announcement yesterday with Sprint and T-Mobile linking up. Now, we don't know if that merger is going to go through. They've tried that a couple of times over the years, and it's never really gotten past the requirements for the Justice Department. So we'll see if this time is any different. But what we do know is that the market didn't really like the news. It sent both of those big companies lower, and of course that pressured the overall telecom sector itself as well. Now, I think T-Mobile came out with earnings after hours. Let me just double check that. TMUS. And by the way, Apple did pop. So you notice over here, I'm looking at the Apple chart now. Notice Apple, poof, went way up. So hopefully that'll kind of lend a hand to those of you that want to be bullish in the markets. Again, Apple having an outsized effect on most indices because of its immense size. Now, if we look at T-Mobile, they did report earnings after hours here as well. According to the quick headline here, it says that they reported 78 cents, which did beat the 71-cent estimate. But you can see their stock really hasn't rallied quite as significantly as Apple. They're up a little bit. Remember, the last traded price can be found over here. So they closed at 59.43, and they're currently trading right around 59, let's call it 70 or so. So they're up about 30 cents after hours. But anyway, that's one of those sectors that's really struggling at this current time. Now, just as a heads up, our trade application here in just a little bit is going to be right here on XLY. It's going to be a stock that's within XLY, I should say. So anyway, keep that in the back of your mind. You can see XLY has largely been just going sideways here recently. Let me see if there's any other charts I wanted to point out here today. Let's see here. Let's go to ratio charts real quick. I wanted to point out that we did make one quick change overnight. David said that he oftentimes uses the discretionary versus staples ratio chart. And I just happen to have a financials versus real estate. So for those of you that went through my charting tutorial already, I did update my blog with the new shared link that will incorporate the discretionary and the staples down below. So I just wanted to point that out because some of you were chomping at the bit, did the tutorial download right off the bat. So if you want the most up-to-date version, remember I do have the updates available on the blog as well, and when I updated them. For some of you, you might not care, but for those of you that want to see the discretionary versus staples ratio chart, I do have that new link available for you there on our website. As you can see, the discretionary stocks have really been crushing the staple stocks. That's what this upward trending pink chart down below is telling us when you're dividing these two sectors into one another. All right, so let's now get into our, one other thing I did want to point out. One other thing before I get to the trade application. Let's see, where was it? 4L right here. I did notice that when David was doing the video last night, he likes to do the asset classes slightly different than the way that I look at them with the 12 grid. He likes to look at it here on this line comparison chart. So I built this out last night to kind of emulate that line comparison chart that I had for the sectors as well. So you can again see all of this is color coded up here at the top for you. Over the last year, as just an example, USO, which represents oil, is going to be colored in that orange label up at the top here that says oil. And you can see that that is by far and away the greatest increaser of these various asset classes over the last year. And of course, you can change this to different time periods to see who's leading who in other time periods as well. So wanted to point that out as well. All right, now with that, let's go and take a peek at our trade application example for the day. And so our first trade application example idea here is going to be on Nike. I shouldn't say first, it's the only one we're doing tonight. Of course, we do a trade application every single night here on these videos. So Nike, as you can see here, part of the consumer discretionary space, it did have a nice little bounce off the moving average recently, but did really pull back here in the last couple of days. Now, admittedly, this is a little bit more of a bullish candle than it was earlier in the day when I happened to peek at it, but we did still close lower on the day by 0.42%. Remember, the market was up, so it was a little bit of an underperformer on the day. In the end, it doesn't really matter because what I'm kind of driving to with this trade application here today is actually an iron condor. Most of you are aware that an iron condor is a way to take advantage of what you would perceive to be a neutral posture going forward, meaning that a stock that might be stuck in a range that you expect to stay in that range. What you can do is you can sell two credit spreads, one on the top side, one on the bottom side, and as long as the stock doesn't make a big breakout move in either direction, you can collect both of those premiums. So I think that's what we're going to focus on here tonight. I'm going to come over here to the trade tab. And I usually look for a 20 delta when starting these particular trades since we get paid on both sides. Remember, if we're just going to do a standalone credit spread, we usually look at the 30 deltas. But since we're getting paid two different credit spreads here, we can improve our odds on each side and still end up with an ample reward in the end since we're getting paid twice. So I'm going to look for that 20 delta. I've got the June monthly contracts pulled up here, which are generally a little bit more liquid. And as we can see right here, we do have delta of 20. Actually 26 right here, which is the 65 put. Remember, the puts are on the right-hand side using this Thinkorswim platform. And so that's the one that we're going to look to sell on the put side, and then we'll buy the 62.50. So for those of you that are new to this, what we're saying by selling that put spread over there is that we want this $68 stock to stay above 65 through the next 45 days, which is how much time is left on these contracts. Now, on the call side of the equation, which is on the left, again, we're going to look for that delta of 20. We've got a delta right here of 17, so that's close enough. And that's going to be your 72.50 strike. So again, what we're hoping to do here is sell a call spread. So we're going to sell the 72.50 and we're going to buy the 75. Now again, for those of you that are newer to this idea, what we're saying on that side is that with this stock close to 68 right now, we want it to stay below 72.50. So those are kind of our bands. If we're selling the 65 put as the driver on that side and we're selling the 72.50 call as the driver on the top side, we want this stock to stay in between those markers. So let's go ahead and load up that trade. And by the way, you can see what that would do on the chart. 72.50 is actually so high it's above the chart up here. And then 65 put would be right down here and be a hair below where this thing bounced a few weeks back. So let's go ahead and place that trade. I'm going to go over here and come to the 65 put, right click, go to sell iron condor. That's going to load up our trade down below. We do have to adjust this accordingly. So the 62 50 and 65 put is set up the right way. Again, we're selling the 65 put, we're buying the 62.50 put, but we do have to adjust the call spread on the other side. And those ones, according to the 20 delta mentality, we wanted to sell the 60, actually it was a 72.50, so let me find that one, 72.50, which is right there. And on the call side that we're going to buy was the 75. Now again, the reason we're buying some strikes as part of this trade where we're selling some as well, the bought strikes you can think of as our insurance policy. That way, in case our analysis is completely wrong and we think Nike's going to go sideways for the next 45 days and instead it bursts either higher or lower, those bought strikes are our protection. They're our insurance policy on this. So we can get about 68 cents worth of credit on that. If we confirm and send that, you can see on one contract we would get 68 bucks in reward possibilities. So we're going to take $68 and we're going to divide it by our max loss, which is 182. And that tells us we're going to get a return on risk of about 37%. That's assuming we get filled at this price first thing in the morning, which of course anything can happen in the overnight cycle during earnings. But for right now, that's what we're going to assume we're going to get filled at. I am going to bump this up just a little bit to, let's do 5 contracts on this. So confirm and send. Everything looks fine there, and we'll ship that one off. All right, well, I want to thank you for joining me here tonight. Always a fun session to get together with you guys. So remember, we're still kind of in a chop and slop market at this point, but Apple coming out after hours and really zooming higher might help the Bulls' cause here first thing tomorrow morning. So we'll all be watching that. Of course, David will be back with you tomorrow. I will be here on Thursday before my big weekend trip to Omaha. And with that, I want to wish you all the best with your trades and your investments. Goodbye for now.